On this week's episode of the Crushing Debt Podcast, Score Success Crushing Debt Edition. So welcome back to this week's episode of the Crushing Debt Podcast. My name is Shawn Yesner, owner and founder of Yesner Law, and I have back with us your financial coach, George Curbelo. How you doing, George?
I am doing extremely well, and making sure that I am ready for the weekend. I think we have certain things, family events. There's always something to do on the weekends. That's the one thing that I'm kind of figuring out here. But I'm doing well. I can't complain, sir.
Cool. Yeah, we're leaving this weekend. I've got a Cub Scout overnight trip in Lake Wales, Florida. Lovely Lake Wales, Florida.
Nice.
I don't think there are any whales in the lakes in this area of town. Yeah, and then I think by the time this episode comes out, we will have also had our last soccer tournament of the year in lovely Brandon, Florida.
Oh, nice. That's a nice place.
Yeah, so we're all over. We went to so I had a friend of mine buy us free passes to Busch Gardens.
That's nice.
And so we went to Busch Gardens. He did it as a, for helping out with what the boys are going through, but my free passes to Busch Gardens only cost me $350 when all was said and done.
What happened there? Please explain.
So you had to pay to get in. So that was $40 to pay for the parking to get in.
Oh, that's true. Okay.
We had to pay for lockers to go on the roller coasters.
Okay.
So we had to pay for that.
Bad, but yeah.
I ended up upgrading mine was just a very basic 1-year pass. I upgraded it to what they call the Silver Pass, which gives me 10% off merchandise, 5% off food, free parking. All that was like $130.
Oh boy!
And then lunch, $150.
Oh boy!
For 3 of us to eat lunch.
Wow, man, Busch Gardens expensive.
Well, so what I also did was I bought 3 of those cups that you take with you all day and you refill them for free.
Yeah, that's a good idea.
So I bought 3 of those, and then if we go back, we can bring the cups back, and then it's only like it's only like $10 to get them renewed for the day, whatever. So yeah, those free tickets cost me $350 when all was said and done.
You can't wait to get back there and spend so freely.
So the parking was $40, and it was I want to say it was $130 to upgrade the ticket.
Sure.
So I got to go at least 5 times to make up, or 4 times.
At least 4 times.
To make up the difference in price.
I mean, they have monthly type events, things like that you can work through. But I would be a little cautious, a little worried. Although it's very easy to spend on your free
your free stuff. Now, again, while I was there, I found they had I can't remember who's the guy, Guy Harvey.
Okay.
Who's the guy?
Who's the guy?
They had this really cool Guy Harvey shirt that I wanted
while
we were there. And it was, I think it was the sticker price was like, the MSRP was like $55, something like that.
Okay.
And I couldn't justify paying for it. But when I got the Silver Pass, Busch Gardens gave me $10 off anything in the park.
Oh, that's nice.
So I had that $10 off.
Okay.
That shirt happened to be 30% off. And then because I had upgraded to silver, I got 10% off all merchandise. So that $55 shirt out the door cost me about $26.
Okay, so that justified.
So, but that calculates into the $350 that plus the boys wanted popcorn and they wanted, so.
Oh, you are not going back 4 more times. Let me tell you that right.
I'm going back 4 more times.
Okay.
Probably more than that. Although we did ride, my favorite roller coaster is Cheetah Hunt at Busch Gardens, so we got to ride Cheetah Hunt.
Well.
We did Cobra's Curse.
Yes.
We did Scorpion, which is another one that goes upside down.
Is it Manatee?
So
Mantis. That's the
Mantis is in Sea. Is it in SeaWorld?
No, you're right. Mantis is. Yeah, you could tell.
I think Mantis is in SeaWorld.
We've done a few of those, but yes. Well, there you go. I'm glad you guys had a good time. Everything was good from that standpoint. How is your credit score based off that trip? Going into it,
So my credit scores, my honestly. Probably really terrible for the host of a debt podcast to say. My credit score is
using more money than credit. Then,
well, my credit score has taken a little bit of a beating lately, but it's because number one, I just got a new car, So
Wow.
I took a little bit of hit for the new car.
Yep.
And then all the stuff going on with my wife, some of the debt, we're still having to straighten some of that stuff out. So my credit's taken a little bit of a beating, but here's the beauty of credit is that time heals.
Oh, does it?
So
Mr.
yeah,
Bankruptcy lawyer, please preach.
time heals. So your credit score will increase over time if you do the things you're supposed to do.
Ah, but what is the things you're supposed to do there, oh wise one? Please,
Yeah.
please enlighten us, because I mean, first of all, we know credit score exists. What does that mean when it comes to credit score itself? Like you would talk about, I get these 3-digit numbers, right? And they tell me what? What is this credit score? This elusive score tell me about?
Yeah. So basically, your credit score is a score that tells creditors the likelihood that you're going to be able to pay the debt back.
Right.
That's basically what it is. So the higher the score, the lower the risk that you would pose to a creditor.
Yeah.
Now, again, in my mind, probably, but I've had plenty of people that started, everyone that comes to see me that wants to file a bankruptcy, they almost always all say the same thing. I started with an 800 credit score. Well, yeah, because I get it, stuff happens.
Yeah.
And, the other thing that's funny to me about credit is people will come to me and they'll say, well, but if I file bankruptcy, how's my credit going to be affected?
Right.
You've got, 2 lawsuits pending against you. You've got,
You're worried about the wrong thing?
eight cards that are late.
Right.
You just financed a new car. Bankruptcy is not really going to make your credit score lower.
Any different, right?
Right.
Mm-hmm.
And or the other question they ask is, if I file bankruptcy, how many points will my credit drop? The problem is there's no set formula. There's no formula that says bankruptcy equals a blank point
40
drop.
points.
Right.
Yeah.
Now, what I do understand is the higher the score, the lower the fall.
Yeah. Okay. Gotcha.
So if you have a 730 credit score and you have a late pay, maybe you drop, and I'm making up numbers, I don't know, maybe you drop from a 730 to a 660. But if you had a 690 and you had that same late payment or series of late payments, maybe you only drop to a 650.
Correct.
It's not as big a drop.
Gotcha.
The higher you start, the further you fall.
Well, I mean, the other thing too, when it comes to, obviously how it's calculated, things like that, but like, what is a good credit score? According to, 800 is the perfect, right?
10,000. I want my credit score to be 100,000. Now I think it's 800.
Yeah, 800 is the perfect. I would imagine good loans, good interest loans, things like that will probably be in your 700s.
Yeah.
From that standpoint, anything below that, you're right. It's the credit worthiness, right? That's what I would think would be the reason for that.
So actually, I just asked the great Google.
Oh, Google. Oh, wise one, please tell us.
A perfect credit score is 850.
How do you do that?
I don't know.
Like, why? Okay, well, I guess there's some things that you'd have to do there, but
Yeah.
I would say on average, good credit scores, be able to, like I said, it's
I would say
around the sevens,
mid to high 700s.
yeah, that's where I would think.
Mid to high 700s would be a good credit
Makes
score.
Makes sense.
And you're right, because you are less of a risk of default based on that score, you would get lower interest rates.
Makes sense.
And I tell that to clients all the time. Right after a bankruptcy, you can get credit. You can buy cars in bankruptcy. You can get credit cards. You can do that kind of stuff. Now, your credit score is not going to be 2%,
Right.
but you can do that kind of stuff. So I think one of the things that people don't understand, there are 5 factors that make up your credit score.
Right. I was about to say, what's the factors that really?
And they're
help?
different percentages. So your payment history makes up 35%. Are you on time? That's why one late payment will hit you pretty hard, because your payment history makes up the biggest chunk. More than 1/3 of your credit score
Gotcha.
is your payment history. Credit utilization is 30%.
Okay.
So how much of your credit have you used? In other words, you have $50,000 of credit card room. Your credit cards combined give you $50,000 of credit you can borrow. Well, if you borrow the maximum, if you borrow all $30,000, if you max out all your cards, your credit utilization is at 100%. That'll drop your score. Again, that's almost a third of your score.
So and the funny thing is, one of the misconceptions as well, it's the debt to income, and it's not. It's really more of debt to credit.
Yeah,
how
debt
much
to
credit you have.
debt to debt.
Yeah, exactly.
In other words, if your credit cards are maxed out and you're late every month, that's 65% of your score.
Makes sense.
So then your length of credit history is 15%. So how long have you had these cards? And that's why a lot of people will tell you if you pay off an old card, you don't want to close it.
Correct.
Because if you close an old card, the length of credit goes down.
Yeah, that 15% gets impacted.
Right.
Gotcha.
Credit mix is 10%. So credit mix is things like I've got a mortgage, I've got a car,
Loans.
I've got revolving debt, I've got a HELOC, I've got, so the different types of credit that you have. And then the last 10%, right? So 35 and 30 is 65, 65 and 15 is 80, 80 plus 10 is 90. So the last 10% is new credit. Inquiries. So that's where, but again, one inquiry, why can't I say that word? will hit your debt, but it's not going to impact it as much as missing a payment.
Correct.
Now, if you have 100 hits on your credit, that's gonna drop it significantly.
One is not gonna drop it tremendously. It's just that the number of, like, if you're chasing different cards all at once, that's gonna have an impact.
Right.
That makes sense. Okay.
So again, when somebody files bankruptcy, a lot of time, we have a couple different banks that we partner with, and so for someone who files bankruptcy, we can connect them with the bank. They can get a secured card. So it would be a credit card with a $500 limit or a $1,000 limit, but you've got to give the bank the $500, and then you can charge up to $500, and then you pay it. You replenish it up to $500, or you pay off.
Like a prepaid
it's
card,
kind of like right.
Gotcha.
And so that's one way to rebuild credit. I know that a lot of credit card companies will send clients offers to get new credit cards right after a bankruptcy, because you're only allowed to file once every 8 years. And so they know that they got you on the hook for 8 years if you don't pay them back. And so they'll give you credit right away. Now, again, it's not going to be at the best interest rates.
Interest, but it'll be something.
Right.
Gotcha.
And then again, time. Length of credit history is 15%. The longer you have credit, the better your score becomes.
Makes sense.
Did you know, by the way, what FICO stands for?
Oh, I do not know what FICO. I mean, it's probably like some dirty 4-letter word. But what is FICO then? Yeah.
So FICO.
Something.
FICO is only one company that does credit scoring.
Okay.
And it stands for Fair Isaac and Company.
Fair Isaac and Company.
Fair Isaac and Company.
Okay.
Not fair as in unfair, inequitable.
That's not fair.
Right. Fair Isaac and Company. And they've been doing it for so long that it became like escalator.
Gotcha.
Every moving staircase is called an escalator, but escalator is actually the name of a company that originally produced them.
Look at you.
So yeah.
You are a wise one today, my friend.
The stuff that I remember,
credit on this one.
the stuff that I remember versus the stuff I don't remember. So I remember escalator, but I can't remember an important fact from one of my cases or something.
You can't talk about inquiry.
And I can't say the word inquiry. So
what's the importance of having a higher credit score? I think you alluded to in some cases as well. Obviously, lower interest rates. Obviously access to higher credit. From that sense, just makes it easier to qualify for the type of loans. Doesn't mean if it's a low score you won't qualify. It just lessens the likelihood of getting a good interest rate as tied to that loan.
Right. That's basically what you're talking about, is that the lower the score, the higher the interest rate, because the lender perceives you as a higher risk. So really the only reason. Now, I've also heard that credit scores are tied, the military uses credit scores in terms of advancement. So as you're advancing in your career in the military, you need to have good credit. What I heard, I don't know if this is true, but what I heard is that some of our enemies, some of the countries that don't like us very much,
that's not too many,
may target people in the military. If they see that someone in the military has a low credit score, that could be a sign that they're struggling with money.
So they use that.
And so some of these foreign powers may say, hey, I'll pay you blank amount of dollars to do this, for or against your country. and they try to target those people based on their low credit scores. I don't know. I really don't know if that's true, but that's I.
It sounds good. Sounds
Again,
like a good plot to a movie.
the
But
stuff I remember versus the stuff I don't. I have no idea. The other interesting thing about credit, a lot of people ask me, can I be fired from my job because I have a low credit score?
That's interesting too. Yeah.
Unfortunately, I think the answer is yes.
Yes, I think in some cases, it comes back to, you know, informed financial decisions. One, there's a concern in regards to if you can't manage or you have some concerns with the credit, you know, what you're dealing with. It does have an influence in regards to that. But in some of our background checks, they do credit checks. They do those kind of things as part of onboarding. So if you don't meet a certain threshold, as part of, again, the contract or what you're signing up, that is part of, you know, part of your onboarding process.
Yeah. Now, and unfortunately, credit score is not a protected class. Mm-hmm. So we have protected classes in this country. Yeah. You can't be fired or denied housing or any of that kind of stuff for your race, your gender, your religion, right. your orientation. Those are all protected classes. Credit score is not a protected class.
Yeah, that makes sense.
So, at least not now.
I wonder if somebody will try to, but I think, garnishing your wages, putting yourself in that position where, if you don't have or maintain some of these things itself, it just puts you more at risk. I mean, we're thinking about just how do I pay off some of our debts, and making sure we forget keeping the credit score, but we always talk about having more money at the end of the month than the other way around, right?
Right.
But when we come back to, like, now it may have an impact in your ability to make money, the jobs that you're at, what you're looking to do, especially, I would imagine if there's highly classified, or there are some things where there's certain jobs that you can't be a good accountant if you don't have a good management of the money that you make from that standpoint. So I think it is something that most folks, I don't want to say we take for granted, but it is something we need to be more aware of when it comes to our credit.
Right. Well, and I've told people a lot of times, when you're born, you start with zero credit. Mm-hmm. So credit can always be rebuilt.
Of course.
Regardless of how bad it gets, it can always be rebuilt. What I would caution are these companies out there that say, we can remove anything from your credit: bankruptcy, student loans, lawsuits, garnishments.
Isn't that the easy way to make more money?
No, they can't.
Wait, they can't. So what are some of the things that you think could, other than these companies promising the world where they can bump up your credit score by 40 points?
Yeah,
and
that's
things
not happening.
like that. What are some of the things that people should do? Well, let's take it in two places.
Yeah.
How do you build credit? Like, what are some of the good things that we could do to build credit in a responsible way?
Yeah, so what I tell people to do is what my dad did for me. You get one card. Mm-hmm. There's no reason to get 1,000 cards. Every time I go to a department store and they say, well, if you sign up for our card, you get 10% off. No, thank you.
Yeah, no, thank you.
I'll just
good line at that line.
I'll use the existing card that I have, or I'll use cash, or I'll use debit. I don't need any more cards.
Especially the store ones. If you look at those numbers, those interest rates are close to 30%.
Yeah. So I don't need any new cards. Yeah. I don't need any of that kind of stuff. But the other thing you can do is you get one card and you pay it off every month. Mm-hmm. So you use that card to buy gas, and then you pay it off. Yeah. You use that card to buy groceries, and then you pay it off. The old rule, you don't put something on credit that you can't afford to buy cash. Now, I get it. Big purchases, we're getting real close to paying off the air conditioning unit that we bought a few years ago. I put the big dining room table I put on credit, but I'm paying it off every month. Yeah. So you just get one card, you charge a little bit, you pay it off at the end of the month. You charge a little bit, you pay it off at the end of the month. And doing that it'll help your length of credit. Right. It'll help your payment history. Right. It'll help. Now, if you wanted to, maybe what you could do is charge like $500 worth and only pay off $450 worth. So you're using, the credit utilization. You've still got a balance owed on the card that's helping the credit utilization part, but a $50 balance isn't incurring $200 in interest. It's $4, $5, $6 of interest. and then the next month you pay, you're still paying some interest component.
Correct.
Most people, though, would prefer just to pay it off.
Yeah, just pay it off. Which still has the same, same effect, but you're right.
Right.
It's only that 35%, right? That
Right.
you were talking about.
Payment history is
Right.
35%.
So so it's really more of what is it that we're looking to do, and having a balance between having to influence all of those
Right.
factors when it comes to your credit score.
Yeah. I mean, again, the two most important: make your payments on time and don't max out your cards.
It makes total sense. It's so easy. Why are we all doing
Yeah.
that if that's the case, right?
So there is the Fair Credit Reporting Act, the FCRA, the Fair Credit Reporting Act. So people cannot take stuff off your credit report unless the information on the credit report is inaccurate.
Okay.
So, for example, I consolidated my student loans maybe 20, 30 years ago. I consolidated all my student loans. When I checked my credit, I had 4 student loans, 2 subsidized, 2 unsubsidized. They all got refinanced into 2 other loans. So when I pulled my credit to buy my first house, I had 6 student loans.
Okay.
The 4 old ones and the 2 new ones. And so then I wrote a letter and said, hey, these 4 old ones have been consolidated into the 2 new ones. The credit agency took a look at it. They called the creditor. The creditor said, you're right. The 4 student loans came off, and I was only left with the 2 student loans on my credit.
Got it.
So you can take off stuff that is inaccurate. You can take off stuff that is too old. After a certain period of time, stuff will just fall off your credit naturally.
Right.
But, if you filed bankruptcy last year, that ain't coming off anytime soon.
That's a few years.
Right.
I guess whatever that. Okay.
Typically, what these companies will do, under the Fair Credit Reporting Act, if a credit agency gets an inquiry, if somebody disputes something on their credit, the credit reporting agency, the TransUnion, Equifax, those guys, they have a certain period of time to verify the accuracy of the information.
Sure.
If they can't verify the accuracy of the information, they have to take it off the credit report. So what a lot of these companies are doing is they hammer these agencies with letters. Verify this, verify this, verify this, verify this. When the credit agencies can't verify it, they got to take it off credit. When they do verify it, they put it back on credit. But in that small window is when the borrower applies for the loan. In that small window when it's fallen off is when the borrowers apply for the loan. That's how they do it. So they don't get rid of the bankruptcy. They get rid of the bankruptcy temporarily so you can finance whatever you're trying to finance. They don't get rid of the garnishments and the late pays and all that stuff. They get rid of it temporarily until you can refinance or borrow or whatever.
Gotcha.
That's how they work, basically.
Man, you just uncovered the
Sorry,
crazy there.
I pulled the curtain back and showed you because I showed you how the magician does his tricks because it's a bad magician that's doing the tricks.
It's not a good idea from that. Okay. Well, there's so much involved when we talk about credit and some of the maintenance around that. Obviously, there's always myths around credit as well. Some of the things like checking your credit can hurt your credit score. You thinking, is that something you think would have an impact from just you checking your own credit score?
So the other thing that happens a lot, the other myth is all these companies that will give you a free credit report.
Right.
Typically, what they do is they'll give you either one of the reporting agencies for free, or some, but eventually they're going to want you to sign up to their monitoring service. Mm-hmm. The only one that will legitimately give you a free credit report is annualcreditreport.com. That's the only one endorsed by the Federal Trade Commission, by the federal government.
Yep.
And I think what I don't know is I know you can do it once a year for free.
Yes.
I know that. Mm-hmm. I believe during COVID, they opened it up where you could check it like every month for free.
Sure.
I don't know if that's stopped yet now that, although COVID's going to come back in the election, right?
Stay away from the topic. Let's move on.
But the bottom line is I know you can do it at least once a year for free.
Yeah.
I don't know if you can do it more often than that.
But again, the recommendation though is that you do check it.
Right.
Make sure that you go out there and like what's out there. Is there any new inquiries that you're not aware of? Is there something that's on that report that shouldn't be on there. You talked about looking at ways to be able to manage that, but it is very important that you actually go and check. Not many people do, and I
No.
think that's something you need to add as part of, again, you managing your finances.
Yeah, but you can go online once a year,
Yeah.
and you can check it for free. The other thing you can do, the other thing I know you can do with each of the credit reporting agencies, there are companies out there that will monitor your credit. You pay them a monthly monitoring fee. I think each of the three main companies, Equifax, Experian, and TransUnion, all have a program, and I think they are free, where that you put like an access excuse me, like an access code. So in other words, if somebody goes to pull your credit, they have to have that access code to pull your credit. And that'll prevent people from doing anything to your credit, because if they pull your credit to try to steal your identity and they don't have this particular access code, they're not going to get access to your credit.
Got it. Well,
So
the other thing that, obviously that's preventative, right? It's kind of
right.
where we're working. Then they also have where if you're not using or planning to have any mortgage or credit or use any of your credit itself, putting a freeze on your credit as well to be able to protect yourself. So if anyone who tries to do an inquiry that's not you, knowing that obviously it's on freeze, it prevents from some of that fraud that does have out there when it comes to your credit score as well.
Exactly.
Idea from that standpoint. So you talked about don't close old credit cards. Obviously once they're paid off. How about closing credit cards with a balance? And then looking to pay those off as well. Well, is that also good? I mean, that sounds bad as well. I mean, it's in the same vein, but we feel like there's always this making sure you don't build more debt, right? So how do I build it? Well, let me close the account and just focus on paying it off.
Yeah, I guess you could close. I mean, what I've typically done is instead of closing the account, what I've done is I've cut up the card, or I've hidden the card, so that I'm not using it anymore.
Put it in the freezer.
Right. I've put it in a cup of water.
Yeah, exactly.
And let it freeze. And that way you got to break the ice. Or what I've done is I disconnected it from like Apple Pay and all.
Right.
So I have no
Amazon, no digital footprint to that card.
It's not there at all.
Yeah.
Now I can still pay it, and it'll pay down the balance as I pay it.
Sure.
And it's still helping with my length of credit report, so it'll still do all of that. But I'm not adding anything to the card, so I'm able to pay it off that way.
Totally makes sense. I mean, again, a lot of myths debunked, as well as things that like to do to be able to build on that credit. So that sounds really good.
I do have a client who my best success story with this.
Mm-hmm.
I have a client who filed bankruptcy, filed a Chapter 7 bankruptcy, eliminated everything, and a few months later was able to buy a $300,000 or $400,000 house on the golf course in Sarasota.
Okay.
Within like 3 years of filing a Chapter 7, his credit had recovered enough that he was able to do all of that.
And change the mindset to be able to kind of do that kind of stuff as well.
Right.
So I love that. So credit score and credit, it doesn't have to be so scary.
No.
But obviously we encourage folks to be able to go out there, learn about their credit score, do more, and understand a little bit more of where they are and what can they do to improve that score as well. Not that I don't want to take business away from you, my friend, but we want to make sure that people are, kind of responsible with that and being on top of those things, so we don't worry about having to meet Shawn in person. But
although
I like meeting Shawn though.
It's really not the credit score that forces people to talk to me. It's what forces people to talk to me impacts their credit score.
Look at you being telling you it's a wise man day from we're learning from the wise man.
This
today.
is
I love
all of my nuggets for the month.
You're done now.
All the podcast episodes after this are going to be garbage.
All downhill from here, people.
They're all going to be terrible. So anyway, we can start to wrap this up before it gets any more off the tracks. I do want to mention our longtime friend, our longtime sponsor, Sam Cohen with Attorneys First Insurance. If you are an attorney or title company and you want to talk about errors and omissions or malpractice coverage, contact Sam at attorneysfirst.com. We thank Sam for everything he's done pretty much for the entire history of the show.
Nice.
We've also got the Patreon page, so patreon.com/crushingdebt if you want to support the show. As we're recording this, the Pan Can Walk is next week. When the show comes out, when this episode comes out, the walk will be over. But I will have started fundraising for the 2025 walk. So, if you're interested in joining the Pan Can team, contact me. I'll put a link in there. I'm sure we'll keep the team up and running to raise money for pancreatic cancer research and detection into 2025. There's also, what else do I want to shamelessly promote? The Money Max link.
There you go.
So I started Money Max.
You did.
I did start Money
We're
Max.
gonna have to see how you go through. What are some of the conclusions and outcomes?
We'll have to see how long it takes me to be debt free. I think as of the recording, I haven't quite set up everything yet.
Sure.
But I did sign up for it, and I think when we were going over some of the preliminary numbers, Brian and Tammy were saying I could be totally debt free in 6 years.
Okay.
Car, mortgage, the whole 9 yards.
Nice.
6 years.
Okay.
So we'll see when I plug in the actual numbers what that says.
There you go. Then it's gonna be like, hey, welcome 2021.
Right. Did we say 6? We meant
21. Yeah, we said 2164.
Did we say you'd be debt free in 6 years? We meant 60 years. Sorry about that. No, but we'll have them back on probably in about 6 months ish or so to see how we're doing.
I love it. I love the idea.
So, anything else, George, or did we cover it all?
No, I think I'm going to give you a lot of credit, and that's it. That's all I'm going to do. Your score is very high today, so keep up the good work, buddy.
Not my credit score, my host score. So I think that'll do it for this week's episode of the Crushing Debt Podcast. We hope that at the end of the month you have more money, rather than at the end of the money you have more month, and we will talk to you in next week's episode.